Welcome back, guys. 360 in the house. Welcome to the 360 Elite Trading course. This chapter today is going to be on volume. Volume. So few actually use it, especially rookies, people that are new to trading and investing, and yet it is vital. It is absolutely critical. It's as important as price. Like, you just can't have one without the other. There is no way that I could conceive of anyone being successful in trading without having the skills that you gain and that you get from understanding volume. It would be like to look at a price without volume would be like peeing in the wind. You know, you got to go real bad, but peeing in the wind, even though you got to go and you're outside and it seems like the right thing to do, peeing in the wind is you're just gonna make a mess, and it's gonna end up being a disaster. That's exactly what it's like trying to trade based off of candlesticks and not taking a look at volume. Reminds me of the story of the Emperor's New Clothes. You know, he thought he had it right, but he was basically completely naked. That's what this is like. It'd be like trading naked. I mean, without just looking at candlesticks and not looking at volume, it would be like trading naked. You're so vulnerable. You're gonna fail. I mean, you're gonna lose. So this chapter that we have right here is very, very important. I'm going to keep it pretty basic. We will probably get into some more advanced volume stuff when we actually get into the trading strategies. But for this chapter, I want to try to keep it basic so you can kind of understand it in detail. If you just have your candlesticks and you do nothing else, you basically have half the story. I kid you not, you basically have half the story. Nobody wants just half the story. You want to be able to see the big picture. You want to understand the whole context of what is actually happening. Context is actually a great word. Volume puts price in context. That'd be a great way of saying it. Volume puts price in context so that you can understand what is actually happening on those bar charts. So what exactly is volume? It's basically the number of shares or currency or whatever it is that you're buying and selling or trading. It's basically that number. So if you were wanting to buy 20 bitcoins and somebody was wanting to sell you 20 bitcoins, that would actually account for 20 in the total volume count. That wouldn't count for 40. Some people think, well, they're selling you 20, you're buying 20, so that's 40. No, if someone has 20 to sell and you want to buy those 20, that actually accounts for 20 in the total volume number. I don't really want to get into the what total volumes each currency has. That's not important. You'll be able to see the difference between average volume and high volume and low volume just by looking at the volume indicator at the bottom. It's not really vital for you to know the exact number and say, oh, Bitcoin traded 100 million, Bitcoin. That we don't really need to know that. You're going to be able to see it just from the pictogram that we use, from the indicator that we use on TradingView. So it's not vital that you know exactly how many shares, just that you're able to read the indicator at the bottom, a very simple bar indicator at the bottom of the chart, which I'll show you how to do. As a matter of fact, let's go ahead and do that right now. I'm going to show you how to pull that up on your chart. So basically, if you have your chart up in TradingView, you guys all should pretty much know how to get there. To pull up this down here at the bottom, see this bottom portion? We have green and red. This is volume. These are volume bars. Each singular bar is underneath a singular candlestick. So each bar represents whatever time frame you pulled up, and here we have the daily. Remember, this is where you choose your time frame. Here we have the daily chart. So each one of these candlesticks represents a day, and each one of these bars, each one of these volume bars down below represents the Japanese candlestick that is above it. So you can pick like this candlestick right here. That would be this red bar would be the volume for this red candlestick. All right, that's it in its simplest terms. Let me spread this out a little bit, make them a little bigger. So this Japanese candlestick right here, this green bar represents the volume of the amount bought and sold for this bar. That is how simple that is. Man, it's like magic. And you can start to see things. As I teach you this, you're going to be able to start to see things just by looking at the picture. So you never want to just be looking at the Japanese candlesticks up here, man. I always have this indicator, unless I'm doing something like I think I've had it. Maybe some chapters where I didn't have it up because we weren't talking about it, but I don't ever make any decisions in trading or any projections or anything without that indicator at the bottom. It is that important. Nothing we're going to do in trading does not involve volume as a great component of our trade. So that's how you pull those up. You just go into to pull. Okay, I showed you it. Let me show you how to pull it up. You come into indicators right here. And you leave it on the built-ins and you just scroll down. This is so easy. There's so many indicators on here, and for the most part I would tell you to stay away from 90% of them and stick to what we're doing. And that's it right here. You just click on this one time. I don't have to click on it because mine's already up. If you click on it again, it will give you it will give you two volume graphs at the bottom. You don't need that. You just need one. So you just click on this volume, boom, it'll come up right at the bottom of your chart. It's that simple. If you want to get rid of it, right up here is your indicators. So this shows my volume. I can hit this X and it would basically take this off the chart. So that's how you would get rid of these indicators. I have the 200 moving average up. I can get rid of that. I don't need that. This is the volume. So when you add indicators to TradingView, this is where you go to get rid of them. Right here in this corner, they'll stack up right here. And you just click on the X and it would actually remove this from your TradingView chart. Okay, so that's how you put it on your TradingView charts. Let's go ahead and start talking about volume, and let's get knee deep into it. I'm a little quieter today. I have some allergy issues, so I have some throat. I have some throat and nose issues, so hopefully this is coming out clear. So I'm a little quieter because my throat is a little raw, and that is just so unlike me. But as long as you get the material, I will be completely happy. All right. Again, I'm going to reiterate. I can't say it enough. Never look at price without volume. Never. Never, never, never. The reason is because you don't know whether the chart, the volume will validate what's going on in price or invalidate it. It's very important that no single volume bar should ever be relied upon on its own merit. Do you remember when we had the Japanese candlestick class and I told you, look, yes, singular candles can represent certain things. However, at no point in time should any individual Japanese candle be taken on its own merit. It must be read in context with what? It must be read in context with all the other candlesticks that are around it. Well, the same thing is true with your volume bars. You should not be reading any singular volume bar on its own merit. You want to take that volume bar in account with all the other volume bars that's in its vicinity, because you'll have trending volume, you'll have consolidation volume, you'll have price reversal volume, and the only way to determine that is to know where it sits amongst its peers, amongst the other volume that's around it. So those things apply to both candlesticks and volume. Don't just pull, and I've had people ask me, well, this volume says this. Well, it does if you strip it out of context, but when you put it in context of the trend that it's in, it actually means this. And so you see here, I have up here, context, context, context. Read volume in context with the rest of the picture. Read it in context with the candlesticks, and then read it in context with what is going on with the other volume bars. So I told you before, volume validates price action, but it can also tell you if it's lying, and we're gonna discover that in a minute. It can validate trends. It can validate, yeah, this is a good uptrend, or it can validate, yeah, this is a good downtrend. It can validate consolidation. and show you, yeah, this is definitely consolidation. This is consolidation volume. It can also tell you when the big money's coming in. You get those massive volatility, huge volume spikes, and you can see, hey, big money is here. Whales, so on and so forth, institutions, big money has entered the game. And then also, on the flip side, volume. You can use volume to tell you, hey, this price is going up on this, but volume is dropping. So it can tell you if the chart is actually lying to you. And we'll get into that in a little bit so you can actually see it. So volume is used to confirm price action or tell you if the chart is lying to you. And it can signal reversals. It can signal breakouts. I mean, there's just so many great things we can use it for. Very instrumental. So let's talk about that validating price. Let's talk about volume validating price. So if we have price that is increasing, price is rising. The price, Japanese candlesticks keep going up, nice green bars, it's going up, up, up. And our volume bars are also increasing. They're green and they're also rising. That is bullish. That is bullish. That tells you that yes, the trend is up and it is not lying to you. It is actually healthy because there are more buyers winning the war than sellers. The buyers are here, so you have a rising price action and you have rising volume action, increasing volume. Strong, bullish, and tells you that the trend is intact and should continue to rise. Very simple. Now, remember I told you it could tell you if the chart is lying to you. So let's say we have an increasing price. So the price of your cryptocurrency is rising, or your stock is rising. However, volume is starting to drop. Volume is getting weaker and weaker. It tells you that there are less, as this price is rising, there are less and less buyers entering into the game. So that tells you that that price increase is probably not going to sustain for very long and that the chart is lying to you and you should look for a drop or a dip or something coming soon. So that tells you that the trend is weakening or that price action is weakening, and it's moderately bearish because yeah, it's still going up. Price is still going up, however, volume is dropping. So it's not full on bearish, but it's moderately bearish. It tells you there is something wrong. It tells you that the current uptrend is in fact getting weaker. And that's an excellent thing to know and see and possibly get out of something before it turns against you. It's a good idea to get out of trade before it turns against you. So the opposite is true. Let's say you have a strong, let's go down to the bottom. Let's say you have a strong downtrend. Nice red bars, nice red Japanese candlesticks. They're just dropping and dropping and dropping. And the volume is falling. That tells you that the chart is lying to you as well, because you have the price is dropping. However, the volume is falling off, so there are less and less sellers. There are less and less sellers going. So that tells you that it's moderately bullish. It's moderately bullish. The downtrend is weakening. Even though it's going down, there are less and less sellers present. So you could possibly look for a bounce or a reversal. Of course, you need to see other things. So that lets you know that the chart is lying to you in the opposite direction. Here, let's say it's falling and the volume is increasing. So you have that nice downtrend, but the volume's going up. It's very important to note you got to be careful with the red and greens here, because even though you have green, but you have a bearish price action, that is still combines both as bearish. Remember, falling price, rising volume means the sellers are there. The sellers are increasing. That tells you that the trend is intact, that drop is firm, and the downtrend should continue. Why? Because there's more and more volume. There's more and more selling going on. So hopefully that makes sense to you. You'll probably make a little bit more sense to you when you see it on a chart. But that's the basic interpretation of this. By the way, this document is available for you for download. You should see it right there where you're at on the website for this week. All right, let's move on a little bit. Let's talk about volume testing resistance or support. So right here, let's pretend this is our resistance area right here where it says low volume test. This is our resistance line. So here we have price. This is a Japanese candlestick. These are Japanese candlesticks. This is our volume at the bottom representing each. So this bar represents this candlestick, this bar represents this candlestick, and then this volume bar represents this red candlestick. So here we have an increase in price coming into resistance. Would be resistance. We're going to pretend that this low volume test right here, where it says that's resistance area. So we have strong bullish price action coming into resistance and testing it. It is being tested. Note this increase in volume. That's good. That shows that this is strong. However, once it tests and it pulls back a little bit here, look at the drop off in volume. See the volume drop off? That's a good sign. That's actually bullish. That means this could simply be just a pullback, and that this is likely to break. In its simplest terms, this is likely to break. Now, we'd have to take this into context with everything else on the chart. However, I'm zooming in so you can kind of see that we have this good volume into resistance. We have this pullback on low volume. So that means that the trend is probably going to continue, and eventually this resistance is probably going to get tested again or broken to the upside. So let's look at what happens, however, when we have an increased price. We have increased volume here. However, this time on the test of resistance, look at this volume on this pullback. So we have a failed test. Here we have a failed test on low volume. Here we have a failed test on high volume. The volume is high, it spikes. That could be a significant reversal sign, or tell you that this bad boy is going to pull back and it may be a little bit longer before this is tested again. So that indicates that this resistance is pretty strong and it's probably going to hold up for a bit longer. So in its simplest terms, hopefully that helps you understand volume as testing resistance and support. Remember, the opposite would be true against support. If this was coming in, well, actually, I think I have a picture of that here in a minute. So yeah, let's actually take a look right here. All right, so here again, same thing. This is our price action. This would be your candlesticks. Obviously, there's no wicks on them, but these would be your candlesticks. These would be your volume action. So stay with me here. Here we have selling coming down on good volume. This volume is up, so that means the selling is good. Look at the bounce here. See how the bounce is weak? The volume has dropped. Look at the volume coming in. Look at the volume on the bounce. That tells you that's probably just a dead cat bounce or just a bounce, and that the trend should continue. And look, we have validation because look on this next candlestick here. See the increase in volume? Yeah, you see the increase in volume. So that tells you that the trend is more than likely intact. And sure enough, on the next bar, we have another increased volume, showing that the direction is likely going to continue down, just like this. This is a different chart right here. So this would likely continue down. Strong volume coming in, weak volume on the bounce, strong volume back, saying trend downward should continue. All right, let's look at it again. This time, let's see what happens here. Here we have a downtrend right here. It's coming down into support on good volume, high volume, so that's strong. We have what's called a dip here on this bounce, but all of a sudden we have an increase coming in. It's still lower than this. It's still lower than the preceding volume on the dip. So the bounce is weak. However, look what happens. Look what happens once it starts dropping again. We have an increased volume here. However, as this begins to descend and price begins to drop, the volume starts to fall out. The volume starts to fall out. It starts to descend rapidly, showing that this will likely hold up as support, and we'll see prices begin to take back off. So against support, strong volume, support breaks. Against support, weak volume, the volume story changes. It changes from bearish, it bounce, to this is starting to look bullish. And you can see the price action, and then we have an increase from right over here. All right, again, because I want to pound this in, this kind of gives you another example. Here's a high volume test of support. Here we have Here we have our price coming into support on high volume. We have our dip on less volume. There's not our dip, our bounce. Our bounce is on lower volume than the volume coming in, telling you that the trend is what? Probably still intact. And look what happens on the descent from the bounce. Volume begins to increase, and we have our support breakthrough. We have our support break. So that's a high volume test of support, and the volume to back it up. Lower on the bounce, increased volume on the down. All right, and again, we have a test of support, but this time the volume story is going to change. Watch how the volume story changes from bearish to bullish. As this price comes into support, comes in on high volume, showing that that's strong. We have our bounce on weaker volume. So you're like, okay, this could continue. However, support holds up again. Actually, we come back down into support on high volume, higher volume than the bounce. However, support holds up again. And on the bounce, we start seeing volume increase. Here it was decreasing on this bounce, decreasing. Here on this bounce, look at the volume increasing. And then on the next descent to test support, look what happens to the descent volume. To the dropping, here's the price dropping. All of a sudden you have a drop off in volume saying the sellers are running out of steam. So what's likely to happen now at support? It's likely to reverse off of that and head higher. And as you can see, volume is now full bull. And so you have a bounce. So why am I showing you this? This gives you an idea of price action around support and resistance areas and whether it will hold, might it hold, what it should look like going through, or what happens if that reverses. So that gives you a decent idea of that. Again, high volume coming into a channel area. This would be a consolidation. So we have high volume coming in on this price drop. We have our bounce off a lower volume. We have our dip off of higher volume. Now the story changes again. Now we have our bounce off of higher volume than previous. This is ascending right into resistance, and then it dips, and this volume continues to descend with this dip. Descends with this dip. So you can kind of figure out what's going to happen now coming out of this. Who's going to win this consolidation? Is it going to be the bears or the bulls? Well, we have a test of the supply, a test of sellers, and we have an increase in volume on this increase right here. So again, our story changed from bearish to bullish. So this time on this bullish attempt up, we have this increase in volume, increase in price action, and it results in a breakout. Now I like that this story has continued over here because 90% of breakouts are 90% of times when you see a breakout, you'll see a retest of the breakout area. Look at the volume on that dip. See that dip? That's what you want to see to maintain. Is this truly going to be bullish? Is this truly going to continue? This dip to test that breakout as support, look at the volume drop. There's that volume bar for this dip. That tells me that old resistance area is now going to hold up as support, and price action is going to take off, and look, you have an increase in volume. It's very simple. It's very simple, and I realize it's not always going to look this pretty, especially in crypto with the volatility, but this gives you a basic understanding of volume and price action. It makes it a little easier on you. So in Japanese candlesticks, I pointed out some certain candlesticks, and one of them was bullish engulfing and one was bearish engulfing, and here we have a bullish engulfing pattern. I want to talk a little bit about volume on a bullish engulfing candle. So let's say here you have the price coming down. If on this bullish engulfing candle you do not have good volume, so that means the volume for this bullish candle does not exceed or is higher than the volume supporting this drop. You want this bullish engulfing candle to have good high volume. If it only has real low volume, especially in comparison to this price drop, if the volume drops off and you have a bullish engulfing candle, it negates the setup. It negates the pattern. and it's probably not going to work. However, if you have a bullish engulfing and you have an increase in volume here, a good spike or a good increase, better than average, and hopefully better than the last few, then this is likely to be legitimate and likely to send this and indicate a reversal. The opposite is true here. If you have a bearish engulfing, but the volume drops off, the volume is weak, then this is likely not valid. It's not going to drop off here. Likely it's not valid. What you'll likely see is price come in. The volume drops with this, then price will probably eventually begin to either consolidate or go higher. So you want to make sure your volume on bullish and bearish engulfing candles tell you the same story that engulfing pattern is telling you. I just wanted to throw that in there as a little extra. Okay, let's talk about volume in trends. Let's go ahead and pull back up our chart, and we're going to talk about volume in trends. Yes, I know there's a lot of lines up there. Don't worry, it's going to look simple. When you have uptrends, which in cryptocurrency right now, that's basically what we're in. We're in the third cycle. It's a nice uptrend. When you have uptrends, you want volume to be increasing or higher on the ups, and on the dips, you want the volume to be decreasing. You want them to be lower or dropping. And you want that overall pattern throughout the trend. Now, there's going to be some variables. There's going to be some variances. And with crypto, there's a lot of volatility. So it's not always crystal clear. However, I want you to look at this price action here on Litecoin. I've tried to open this up a little bit so you can see quite a bit of time. This is from November 2020 all the way to our current price action right now that we are currently seeing. And I wanted you to just get the big picture. Here we have trends. Here's the uptrend line right here. This is the uptrend line. You guys know that already. Uptrend line. Everybody got that. And then we have our ups. We have pullbacks or dips like this. We have our ups. We have pullbacks, dips, consolidations, and then we have ups and we have our pullbacks. So just by looking at this, I've drawn arrows to make it easy. Look at our trend action and our volume action. There's our price action. Look at our volume increase to support that. See how you can draw the same arrow? Look at our volume on, look at our price action on the dip consolidation. Look at that drop out, kind of fall out, versus this action over here. That tells you that the trend's probably intact and still healthy. And sure enough, what do we have? We have an increase. We have another uptrend within a trend. So we have another increase. And look at this volume. Nice increasing volume. Then we have this drop right here, this drop consolidation. Look at the volume fallout. Again, volume fallout. Then we have another nice run. And we have another nice increase in volume. And you can kind of see the volume supporting the price action. That is what you want to see in trend. That would be exactly the opposite if this was bearish. You would want to see volume increasing on the drops, and you would want to see it decreasing on the bounces if you were shorting or going short and the trend was down. I wanted to point out a couple of individual Japanese candles and volume to show you some other variables here. Look at this candlestick right here. This was the January pullback. We had that, Bitcoin. I know this isn't Bitcoin right here. This is Litecoin, but Bitcoin pulled back, 30% in January. I want to show you on Litecoin what that looked like here on this candlestick. So would this be bearish? Yes, this is bearish. However, I do want you to note half the candle is a wick. Half the candle is a wick. That's actually, even though this is bearish, that's actually a little bullish. And remember, every time you have a bull trend, you're going to have pullbacks. So you don't want them to be nasty, nasty, nasty. You want them to be healthy and normal. And the fact that we had this nice lower wick said there was a lot of people wanting to buy this dip, and that's a good thing. That's a good thing. That's what this lower wick indicated. And that's evidenced by this huge candle. this huge volume spike right here. Now, most of you are looking at that and going, oh, that's dirty, that's nasty. Look, you got a red candle. Look at this volume. This thing's done. It's going to crash. It's going south. It's over. Game over. Well, then you're not reading the story correctly. You're not reading the story correctly. Remember what I said? Look at the lower wick. That means not all of this was selling. Yes, it's a red candle. However, this was all buying. That means all this price action got here, right here on this lower wick was rejected. It was rejected or bought up. So this just represented, man, there was a massive battle. There was a massive, massive battle. A lot of buying and selling. However, a lot of this volume was buyers buying the dip. And as you can see, this spike is bigger than all the other ones around it. Why? I call these exhaustion volume bars. And here, it actually represented that this would be the low of the dip for this area. As you can see, did it continue to go over? Yes. That doesn't mean it won't consolidate, but this was a decent signal that price was probably not going to go lower than that, even though it would consolidate for a while. We had a 14-day consolidation dip area. And as you can see, volume drops off. I mean, significantly, telling you that the trend is fine and that this was just going to consolidate and it did. It consolidated all the way to where? The trend line. It consolidated. Imagine that. Look how everything I'm teaching you is working together now. Everything is working together. Volume, the drop, but half of that was being bought, consolidation right into the trend line on reduced volume, and then bang, you have trend action continuing on increased volume. Man, I love this stuff. This is fantastic. So let's take a look at what's happening right now. And people are panicking, and I don't get it. You know, now that you guys are learning this, you're going to be much calmer when you look at the big picture. You're going to be much, much, much calmer because you're going to be able to grasp, literally within seconds, you're going to be able to draw these things up on your chart, and you're going to be able to grasp what's happening. Here we have the same thing. We have this massive, okay, so we have this awesome run-up. Awesome run-up on volume increase. On volume increase. Had a little bit of spiking right here, but we have that lower wick. A little bit of spiking right here with that lower wick. And then we had some decrease in our final increase, which told me that something was probably coming, that there was a drop probably coming. And sure enough, we did have a drop. But look at that incredible lower wick on this candle. Incredible lower wick on this candle, meaning telling you what? Telling you this is normal. This is healthy. This is basically pullback territory. This is not game over type material. This is not, it's all done. The bull run is over. That doesn't mean it's not going to continue to drop. It just means that there is a battle, that there are buyers willing to buy this. And sure enough, on the next candle, what do we have? We have another drop. We still have buying going on. However, we are well above our trend line. And we have what may have been, for Litecoin, it may have been an exhaustion day here. And why am I saying that? Because we have this nasty red candle right here. However, we have this huge spike. But look what happened the day after. This was yesterday. Look at the volume drop. Excuse me. Look at the volume drop off. As of right now, we are bouncing. However, look at the volume drop. This volume, we're 12 hours in. By the way, over here is the time left. Remember, this is the daily chart. We have about 12 and a half hours left on this candle. So if you were to add 12 hours to this bar down here, it's probably going to take it to about right here. So we're going to have a drop in volume. Now that tells me that this is probably going to continue to consolidate for another day or two. We still need to see more action and more volume on what's happening next. However, conceivably, you can guess that conceivably we have reduction in volume. This could consolidate to the trend line. Now, it doesn't have to. It could literally, we're on track for a lower volume today, but tomorrow we could get a volume spike and this bad boy can just run. Of course, however, based off this drop off right here, and what we're seeing, It just tells you that we're still in what? We're still in consolidation mode. This was our big, deep, dirty right here. I think we're pretty much done with our big, deep, dirty. We could probably still dip or consolidate. However, I believe that goes sideways, and I believe it happens on reduced or lower volume. Hopefully that makes sense. So let's now take a look at Bitcoin and just go back into history a little bit. Let's see where we're at. Okay, so this is back to literally way back to the last cycle on Bitcoin. I want you guys to kind of just take a look here and see. You can see how volume support this. Here's our trend, our bull market trend. Let me pull the whole picture up for you. There it is, right from bottom to top. From bottom to top. This is from April 2017, and then we have our December peak. Just again, you can kind of look down here and see how volume, I've roughly drawn it in. However, your eyeball should be able to start picking it up. And you can go in and do some others. However, you can see how volume supports the uptrends. Here, I haven't drawn that one. Here's one, boom, uptrends. And then they're reduced on these dips. You have volume reduced on most of these dips. Again, in your pin bars, when you have these pin bars, especially during uptrends, those are very, very healthy. Look at the volume here. This should not freak you out. Why? Because it's got a long lower wick. And we're in an uptrend, so it says buyers are stepping in, and that there's really nothing dangerously wrong with this price action. Even though you don't let this freak you out. Make sure you're reading them together. This candlestick right here, this candlestick, long lower wick, yes, high volume, but that says there was a lot of buyers there. There was a lot of buyers there. Let's take a look at what happened right here. Here we actually have an increase in volume on this drop. So we do have a drop here. We do have a drop, price drop here, and we do have a little bit of an increase in volume. However, look what happens after it bottoms. You have a major spike. That means there was major buying here. You can tell that how? Lower wick, there's not really much of an upper wick, and it has a nice green body, and it closes near the top. So that right there helps to even though you have some increase in the dip right here, this one pretty much negated, this price action on the following candle pretty much negated what was happening over here. And then you have volume drop off a little bit before it starts to ascend. Here's this price action right here. Volume dips off saying everything's still in order, everything's okay, and that the preceding trend, the underlying trend should continue, and sure enough, it does just that on these increases before we have this massive final spike where we start to get parabolic. Here's where we start to get parabolic, and then things begin to drop off. Now, this was the peak right in here. We have our gasping, basically our gasping volume right here. That was pretty much our gasping volume, signifying that it was the top right in this area. Right here on this one. This was where it topped out at. That was where it reached its ATH, close to 20,000, and that bar pretty much indicated as much. And we started to drop off. And now we do have this right here. However, note how the red has already taken over. Note how the red volume has already taken over on these drops, showing you something has occurred. Increase in the volume. Increase. So even though you have this in this category, this pin bar candle, this is still bearish because it's in context of a drop, and it's in context of this other nasty increasing volume. So this pin bar, even though it has a lower wick, is no longer in the uptrend. It's now in what we had started as the downtrend. So now when you see these down here, they are no longer, these pin bars are no longer bullish. In fact, they represent that they are still bearish action, bearish price action. Now they precede little bounces, they precede consolidation, they precede this action over here, and here they precede a bounce, but in no way, shape, or form would I consider this a reversal. Why? Because your volume is now supporting I have to move these, they moved. Your volume is now in full support of these drops. Price action is dropping, volume has now taken over to be bearish, completely bearish in nature. Bearish, bearish, volume increase, volume increase. Bearish, 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 volume increase. So you could see them without me moving the arrows. Look at that volume spike, volume spikes. And again, down, down. So that gives you an idea, a basic overview. And let's go to this where we had that very miniature bull run in, let's see, in 2019. That was from April to January 2019. We had a bull run. You remember that bull run? Here's consolidation volume. I want you to see this. Look at this consolidation volume. Volume is literally dead. Like, it's just not there. There's no big money coming into play. All of a sudden you start to see big money come into play. And look how the story now changes from bearish to bullish. I mean, you can see this. You can see this. Until we reached our top, look at how the tops are indicated. I want you to start to see this stuff. These are exhaustion. When you see volume bars that are way above others, they're signaling something. They're signaling you that for that moment, that's the top, or that's a reversal, or something is going on. You need to pay attention. You need to get in there and find out what it is. And this represented that was it. That was the end of the bull run for 2019. Like, that was the peak, 14. And sure enough, the bad Bitcoin decided to come back down to 3,000 even after that. But I just wanted you to see how volume changes. It changes, structure change, and we had a bull run. All right, let's come to present time. Again, with no explanation. Our trend, and we have volume supporting the trend. Here's our dip, and volume drops off, and our trend back up, and volume increases. We have increasing volume until we get to our current state, which is right here. Here, let's get it. So here's our trend line. This was January's. This was last month's dip, which was 30%. Note the exhaustion spike right here. That pretty much told you that it wasn't going to go a whole lot lower. Did it go lower? A little bit, but what did it really do? It really consolidated. And after that point, it really just consolidated into what? The trend line. So this was really telling you, okay, there was a lot of big dip going on there, but look at the wick. The buyers came in. This is taking place in and amongst an uptrend. This action has to be read in context of this action. This action has to be read in context of this action. So based on this lower wick, this massive gasp right here, you'd have to say we're going to consolidate, and we did. Volume dropped off. We consolidated right into the trend line. As soon as we hit the trend line, look what happens to the volume. Bam! Spike. And that indicates the trend continues. And we have this volume increasing, volume increasing, volume increasing, volume increasing, until we get to, again, another pullback. So, in my opinion, 2 days ago, because of that big volume spike, it indicated exhaustion on this drop. Exhaustion on this drop. So could it go lower like it did a little bit here? Sure, it could, but where are we more than likely headed? Over to the trend line. So we're probably entering a consolidation. Look at volume drop off. Yesterday's volume on Bitcoin has significantly dropped off. Today, it's not even going to reach the high of yesterday. So even this candle over here today is going to be lower on this consolidation. You'll see that on consolidations. That means we should not expect today, unless some major volume action comes in or something happens later today, but based on the current pace of volume, whatever today's candle ends up to be, it's not mega bullish. It's consolidatory. It's a consolidation type move. It's a consolidation type move. And until we see volume support a move, like we get a green candle on some mega volume, then the opinion of mine is that we consolidate and continue to move in this direction at whatever pace it may dictate. You see I'm moving the arrow because it will dictate the pace. However, I believe we move towards the trend line before we continue. I believe the trend is intact and we continue. There's nothing in volume that tells me otherwise. All right, boom, boom, boom. That was awesome. That was awesome. So I wanted to show you breakout volume and then we're done. Let's go into breakout volume. Oh, Cardano is the one to show you breakout volume. I want you to see this. You should already be seeing structures that I've already taught you here. I know you remember these. I've just thrown these lines up. They're not perfect. I just to encapsulate what's happening here. Here you have resistance. You have a trending price action into resistance where that wooden door has been knocked on multiple times. However, the buyers, there's less and less sellers and there's more and more buyers. Look at volume supporting buying going into this. Now, what I want you to see here is the volume on your breakout. Look how we have a volume spike here. And then right into the test, there is a spike. Look what happens on the breakout. A spike. So you can see here what you want to see on a breakout is this massive volume spikes. It validates price. It validates the breakout. Breakouts on volume is what you're looking for. Now, that doesn't mean it doesn't come back down and retest. I want you to look at this green candle right here. You see how this wick comes all the way back down and touches support? You will see that time and time and time again. Almost every breakout comes back and tests the old resistance as new support before taking off. So it ran, pulled back, and then look, we have the same action we had here, we have over here again. This is bullish, very bullish. Look at the drop off in volume on consolidation. So we have this entering consolidation. However, we're increasing price. Price action is increasing here. There's less and less sellers. It keeps knocking on that wooden door until you see volume spikes coming in. This was an indication that it was close. Volume increasing here. And sure enough, on the next attempt, major volume spikes. Boom! That door was shattered. However, look, there's a retest. See this green candle? There's a retest right here. Has retested this old resistance and support. Look, it does it yet again. That's why I picked Cardano, because man, there's so many examples in Cardano over the last few months. It's ridiculous. It's literally mirroring the same thing over and over and over, repeated pattern over and over. This is very bullish, very bullish. Increasing buying action. We have higher lows into resistance. That wooden door keeps getting knocked on. Look at this volume increase. It's telling you even early. Even back here, it's telling you something's coming. Something's coming. And sure enough, boom, we had massive explosions. See, now you guys are learning my magic tricks. This is how come I knew things were happening. People are like, oh my goodness, 360 is a genius. What the heck, what the heck, what the heck? And that's where I'll stop there. For that, I just wanted you to see what it looks like to have breakouts on volume. We are going to get knee deep into particulars of volume when I get into the actual trades. How do I pick different trades and what strategies I'm using and how they apply. But for the point of this class, that's enough. So again, volume can be used to validate markets and their trends. Volume can be used to tell if a chart is lying to you or whether it's telling the truth. It can be used to verify that pullbacks are simply pullbacks, that dips are simply dips, or that bounces are simply bounces, but the overall trend will continue. It can be used to identify reversals in trends and tell you that, hey, this bad boy is getting ready to go the other way. It can also be used to find the smart money when the institutional money enters the game, because you have those massive, you can see those spikes starting to get larger and larger in comparison with the rest of the year or the rest of the month. And then volume, it can also indicate blow off tops and volumes. And we talked about those as exhaustions. All right, I think I went on long enough. I know this was an intensive course. This was vital. This class was vital. So vital for you to have this information. You're probably going to need to watch this a couple of times. I encourage you to do that with all of the chapters that you have. Get in there, start drawing these, start looking at volume, go back into other charts, go back into history, look at price action, then look at volume and read it, study it, let it tell you the whole story. You will begin to see this. The more you do that, the more you will begin to see these pictures instantly. You won't even have to draw anything. You won't have to draw these arrows. You'll see it with your eyes and you'll know what's happening in it because you'll have the full story. All right, guys, that's it. Until next time, here comes the boom.